Welcome to TradeTheMBA.com. This is John. This report is for the 12th of September, and you can see strong push, getting exactly where we were talking about. I was looking for the 2485 range that would then push us towards 2500 for the ES. We had talked about the buys that we were seeing. In fact, I pointed out the 50K was presenting a buy. Let me put up the Opus 2 right here, and I was pointing out that we had the stop set up there and that we've only started to increase from there, and I believe also from using the Opus 2 on a daily. I had this set up here after a couple of brief, this one day tweak out cost, but still it's going to push it to new equity highs coming off of this adjustment here, and only going to propel things. And that's just more in line with what our expectations were about getting back up to the highs off of the whole fake, the world is ending. Yes, there was real concern with the hurricanes and the kind of damage they could do. But once we realized that the Florida situation wasn't catastrophic, I mean, it's bad, but it's not catastrophic, and the market reacted, particularly since you also have the debt ceiling and that has been moved. So there are a lot of hurdles that have been cleared. Yes, there's still December, but that's December and we're in September. So the market isn't quite worried about that one so much as to realize that the dynamic may have changed, that deals can be worked out, that gridlock may be a bit over, and that tax reform potentially is possible. So this is adding back to that exuberance, which is only going to elevate confidence levels, which should push us to new highs. Same with the NQ, not quite as strong as the ES, but then again, the ES has a little bit of making up to do given its weakness compared to what we saw strength-wise from the NASDAQ. So that kind of parity, what we would call just, it neutralizes itself. It becomes an average weighted situation where the one overdoes it, then the other one has to catch up, or the leading market fades back. The euro holding up very strong above the ranges. Like as I've mentioned, US would like 120-ish range, but typically the general market has been somewhere between this 115, 111. The fact that we've been so outside the range has been a bolster to the market, keeping it up during this difficult time. We've constantly talked about how ridiculous this move of the treasuries was, and really needs to, central banks can do an awful lot, and fear from people will cause them to do a lot of really stupid things, and certainly buying into that climb was crazy. In my mind, we had plenty of short signals, but the price still kept rising from it. But then you get this kind of massive gap down, and that's how you get stuck in those kind of situations. Oil, like we talked about, it's going to fluctuate back and forth in this range. We've had this bottom top area for a little bit of time now. It's probably going to stay within that for a little bit longer. We had a weak signal come through, but then it gapped down and caught a little action. And I think that's part of the exuberance of the market rising, suggesting that, hey, the economy is not going to come to a stop because of the two hurricanes. Caused gold to suffer just a little bit. It had been in a short signal from back up here as we started to rise with the steel coming in, and held up pretty strong. But look at that complete short seller fade out on this completely. Short-term buyer causing a short situation to rise, but this is way overdone when you get DOC with the cyan plus 13, red at plus 13, crazy stuff. But it's got a long way to go, and it can ride that kind of super exuberance. Likewise here with the ES run, and you can see the continuation of that following the ABMs. Still making new highs. As long as making new highs when the low's rising, normally we would expect a return to it when we get a sell signal. But when you also have new highs being made, negates it. And then, of course, that beautiful cyan below red the whole way through from the signal back over here. And it's continued to rise from there. So that goes all the way back to the open. Some people worry about when there's a gap open, but when you start, some of those days just become trend, and boom, you can get a 2 or 3 day run. You don't always have to be at the bottom of it to capture it. In this case, we were in early when you look at like the 50K setups from way back here, and then 60 range, and then even before that, way back down here in the 30s from the buys. So it's all relative, but it doesn't mean, this is one of those things where you can't look at where price has been to where it's come. You have to look at what the readings are telling you that it's going to go. When you have cyan under red, that's a buy signal. And when it reinitiates the same situation, you had a secondary one, and even though it's way up there in, price land, we're right here, we're in the 2480 range. May seem like a lot, but it's still a 10-point move on the futures. So all in all, it's good stuff, and we're going to keep following it. I've got a couple of updates, I think, that are going to be ready in the next day or so to be sending out to you, so you'll be looking for those. As always, though, trade well, and we'll talk again on the Skype chat.